Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Bloomberg reports that Intel approached Apple about a possible investment and talks on the two working together more closely. We have the latest.
Plus, a quantum breakthrough. HSBC said it achieved a world first in deploying the next frontier of computing in financial markets using IBM's Heron processor.
And Disney gears up for a legal fight with President Trump over the reinstatement of Jimmy Kimmel's show.
But first, we check in on these markets, which, if you're looking at the Nasdaq 100, Ed, we are down for a third straight day, but only just. We're still questioning the overall picture of valuations. We're still questioning what the inflation print on Friday will tell us, and we're still questioning more broadly how far we've run up in terms of this seismic moves on the S&P 500 and the Nasdaq 100. We're still close to record highs. I'm looking, though, at crypto that's actually pulling down yet again. We've got a key expiration of options tomorrow. We're seeing some of those bullish bets coming out of Bitcoin, and certainly of ETH. We're down another 3.6%. But what are we looking at under the hood?
Yeah, let's get to our top story. Shares of Intel markedly higher. For most of the session, the only name on the Philadelphia Semiconductor Index in the green. Apple also higher. Bloomberg reporting, Intel has approached Apple about the iPhone maker investing in it and held early talks on how the US tech firms could work more closely together. That's according to sources. Intel, which is now 10% owned by the US government, is looking to make a comeback and has already secured investment from Nvidia and SoftBank. I want to get out to Bloomberg's Ryan Gould, who broke that story with the deals team. Let's get the very specific details that we had from sources. These are early talks. What was the structure of what they discussed, and what do we know about the status of those talks?
Yeah, these are early talks. I would say there are still a few unknowns. There's no sense at this point what that investment could look like. There has definitely been some commentary this morning as people are sort of digesting this news, and you can see Intel shares are up some 12% or so since yesterday and today as they think about what this could mean for both companies. I think if you're Intel and you're looking at what it means to right-size a balance sheet in your foundry effort, could this mean Apple comes in and thinks about, sending foundry chip orders to Intel's foundry, potentially? Could this be something more on the product side? Could this be packaging for some of Apple's advanced chips? Maybe, but these are early talks, and I think this just goes to show that Intel is being quite proactive, especially since the United States government took a stake of 10% in an unprecedented move a few weeks ago. But I think, at this point, I think people are looking at this as a potentially positive move for Intel, maybe a little more of a middling / unknown move for Apple.
Yeah, and that's reflected in the stock move there. We've got 17 billion added in market cap to Intel, less so for Apple, because, Apple at the moment designs its own chips, but looks towards TSMC for that. How much do we think, though, that Apple's dialing in on the fact that they committed to $600 billion of investment in the United States?
Listen, I think if you're Tim Cook and you're at the White House in front of Donald Trump a few weeks ago saying that you're going to invest $600 billion over the course of a 4-year period, they already announced a $2.5 billion investment package with Corning, which makes Apple's glass for most of its iPhones. $600 billion is a lot of money. And, if you think about how that could be deployed in the United States, as far as Apple's Made in the United States pledge goes, this is about onshoring as much as it is about anything else. This is about satisfying the White House's plan to have American chips made in the United States. And to sort of satisfy some risk as to concentration in Taiwan, where Apple in particular manufactures most of its chips at TSMC.
For what it's worth, an Intel spokesperson declined to comment on our reporting, and Apple didn't respond to our request for comment. There's a history lesson that's important here. Apple, mostly in Macs, but also in phones until 2019, had a lot of Intel silicon in it. That relationship's changed. Explain that. Same with Nvidia. Nvidia and Intel had a rivalry history that's now changed.
Yeah, I think that is a really important point to underscore. About 5 years ago, Apple decided that it was going to transition away from Intel, mostly because it felt that Intel's technology, its actual processes to make some of these advanced chips, wasn't satisfactory enough. So that was kind of a painful breakup for those two companies, a relationship that started as far back as 2005, when then CEO Steve Jobs transitioned away from PowerPC chips toward Intel. I mean, that was kind of a rough breakup as far as Intel's chip-making ambitions in the United States went.
Ryan Gould, it's a great scoop. We thank you for breaking it down for us. Let's get an investor perspective here. Joanne Feeney is portfolio manager over at Advisors Capital Management. You have had a long history of studying semiconductors as well. At what point does Intel become interesting as an investment opportunity when the government seems to be backing it so hard?
Well, clearly the government is changing the game for Intel, but their challenges remain, and their challenges are on the innovation side. Their design plus manufacturing has run into trouble over the past few years, so much so that they've lost a lot of market share to AMD, and they failed to become a player in the AI advanced chips. No amount of government investment is going to make their engineers smarter or necessarily speed up innovation. Now, throwing money at innovation means they can hire better people, right? So there might be some room to believe that their pace of innovation could improve from here. But they seem to have a long way to go. Having potential customers on the sidelines, whether that's an Nvidia or an Apple or others, will certainly encourage investors to take a harder look. But right now, an awful lot of assumed outcomes are built into the price of the stock.
Right.
So it's not something we're enthusiastic about.
Joanne, you know this industry. You have a deep history of covering semiconductors. You also know the names and the players behind the scenes, right? When this story broke, what was your interpretation? This is Intel going out there and shopping itself to try and save itself, or this is some kind of savvy and smart strategic play by Lip-Bu Tan?
Well, I think Intel has for a while been trying to find customers for its foundry plan. And we saw Pat Gelsinger do that earlier, and he was trying to build the fabs ahead of having customers. Lip-Bu Tan obviously is taking a more cautious approach, which I think investors welcome. The government money will help them maybe bridge the gap between getting those fabs up and running and having customers. I think it's smart. They should be talking to everybody that wants to diversify away from TSMC. For a long time, the geopolitical situation was fairly stable. I think now there are greater risks to that political situation and relying just on TSMC, even if it does have some manufacturing here in the United States.
Lip-Bu Tan's real words were, I'm not going to build it and then wait for them to come. They've got to come and then I'm going to build it. So there is, and then the White House jumped in. It is so much the national security focus, not only because, of course, one of the key plants that Intel was originally going to be focusing in on was in Ohio, and we know who's really rather focused on Ohio too, the VP. All of this, though, do you think the US can become a domestic chip-making champion without TSMC, without Samsung?
You know, Caroline, that's yet to be determined. Intel was a U.S. manufacturing champion until they sort of went off the rails with some, poor decisions on which direction to focus for chip manufacturing recipe development. They went down one path, TSMC went down another. TSMC was right, Intel was wrong. And now they're trying to make up for that. And it's going to take time. And I think it's appropriate for potential customers to take a look at Intel, even if it's not this year or next year that they can be used, but even if it's 5 years from now. In chip design, you have to work with your manufacturer because the design details depend on the manufacturing recipe. So they need to start working together now, even if it's for manufacturing 5 years from now. So there's hope for Intel, but it's a little early, I think, to be assuming that they're going to be successful in this.
Joanna, I think I want to talk a little bit about the Apple side of this situation. Correct me if I'm wrong. I think Advisors Capital has like, let's say, 1 million shares of Apple across its different funds, right? And the reporting was really clear. This is Intel going to Apple, who bought the modem business from Intel in 2019 anyway, and saying to them, like, you want to invest? Like, help us out. But Apple does so much of its own work in silicon. Like, do you see a rationale for Apple to be like, yeah, you know what, let's do this?
Yeah, we have owned Apple for a long time for our clients across various strategies, some conservative, some more aggressive. But Apple is doing the smart thing here. And first of all, we don't know if these talks are actually happening. We don't know if they're going to advance. But from Apple's perspective, it's no longer about the design of components for its iPhones and its Macs. I would expect that this to be more about manufacturing. This potentially is a move for Apple to become diversified away from entire reliance on Taiwan Semiconductor and to have a second manufacturer. They love to have second suppliers. They haven't been able to because Intel has been so far behind. If the belief now is that with government subsidies and government investments that Intel will have the time it takes to modify their manufacturing recipe and be able to roll out at capacity, product for Apple, Nvidia, who knows who else. That would be very appealing, I would think, to at Apple.
Intel was founded in the 60s, right? And we're in a very different situation today. In 1997, Microsoft bailed out Apple. Funny things happen in technology. In your career, this Nvidia announcement with Intel and now the reporting on Apple, are these things that you see coming?
Well, we already saw that Intel had received a massive subsidy under the previous administration's CHIP Act. So we knew Intel was getting this money. What's different now is this administration has decided to turn the subsidy into an ownership stake, which brings some returns back to the taxpayer. But also, I think the second shoe to drop, potentially, are incentives for potential customers of Intel to help Intel get to that point where they have manufacturing that's competitive with Taiwan Semiconductor. That's what's really changed today, is the incentives circling around the whole industry to try to build up that domestic manufacturing. And that's a big change.
I have to say, as an investor, you look at what happened with Lithium Americas yesterday. The US reported to be looking at a stake in that company. The shares rocket 90%. The fact that they take a 10% stake in Intel and suddenly the shares just go up and to the right. Does it have to become part of your fundamental research that when the US government gets involved, it's very hard to bet against that stock or not be involved in it?
Yeah, fortunately, Caroline, we're able to pick and choose stocks. We own, 40 to 50 equity positions in the different strategies. So we can choose not to be involved in companies for which, we think there's significant risk of government involvement because you just don't know which way it's going to go. And, some of these announcements have been pretty unpredictable. So fortunately, there are plenty of places to invest where you don't have to be directly exposed to government risk. We've owned Broadcom for a long time, since I joined the firm back in 2015.
Yeah.
And they're doing just fine without any government involvement, and they are playing a bigger and bigger role in the AI rollout.
And let's just talk, therefore, about the context of the AI circularity that people have been worrying about, or just more broadly the valuations. However, we are seeing bigger and bigger numbers. Yesterday it was Alibaba saying we think it's going to be 4 trillion by 2030 that goes into the need for AI compute. We do see a space where Nvidia can win, maybe even AMD can win, where we see custom ASICs win as well. Do you put your bets into all of these names, or do you have to focus in on the key win that thus far has been Nvidia? Yeah,
I think, Caroline, the way to play this is to recognize that this is a pie that's growing, and that there'll be more and more players that take little slices here and there, and there may be some market share change, right? Nvidia is bound to lose some market share, not bound to grow less quickly necessarily, but bound to lose some market share. We know AMD has some good processors out there for AI workloads. We know that Broadcom is co-developing with the likes of Google, other ASIC-based processors. So I think there's room for a lot of players to participate. I think the wise investor will be a bit diversified. Don't just pick one, pick a handful. There are startup companies that aren't available to us as public equity investors, but those are worth watching because they could become competition along the lines.
The neoclouds, for example.
Yeah, exactly. I think we have some years to go while this pie continues to expand. At least that's the information we have now. Unfortunately, we don't have great information on how well the applications are turning out and how much money is being made. And that ultimately could sustain data center development in the future. But in the meantime, we also have sovereign wealth funds investing in building out data centers. So there's a lot of room for global growth here.
Joanne, there are hundreds of billions of dollars committed to build data centers, and we know where the chips are coming from, and we know who's going to lease the capacity. But there are still so many missing pieces. Electricity, the main one. I just don't understand if this is like people writing checks they can't cash, in the future, because all the other pieces won't be there.
Yeah, no, that's a really good point, Ed. They're writing checks that nobody will take. because there isn't the energy potentially to power the data centers. That's why I like so much the global spread of this build out. Yes, in the U.S., right, we need to build more, facilities for powering these, and we're seeing the companies themselves get involved, and that might very well be the solution in the U.S. But we're going to need an awful lot more investment, and that's, by the way, why the AI so-called investment theme has spread beyond technology. It's into utilities, it's into even pipeline companies, right? Where is the demand spreading, in addition to the applications? And the global footprint will, I think, be fungible enough to allow the data centers to go where the power and the land is available. And so that's a way also to avoid those bottlenecks.
Joanne Feeney of Advisors Capital Management. Robust, deep conversation. We appreciate it very much. Okay, we're going to get out to a conversation now with former New York Governor Andrew Cuomo on the state of New York City's mayoral race, and he is speaking to Bloomberg's David Gura.
Him up 25 points to you. Of course, it's a four-candidate race. How do you see the path forward here, given the polling and sort of where things stand? I should note that the polling hasn't changed a tremendous amount in recent weeks.
Yeah, it will change dramatically. What you see in the polls is Mamdani is always at about 40%. That leaves 60%. As you accurately pointed out, you have a multi-candidate field, so four people or three people are breaking up that 60%. I don't think you're going to wind up ultimately with that larger field. I think the field is going to collapse. I think it's going to come down to me versus Mr. Mamdani. And as I said, Mamdani has 40%. He has his very radical ideas, which are exciting to one group of the population, especially young people, but are polarizing to many other people. And I think it's going to come down to a one-on-one, and then it is a totally different race, David.
Curtis Lee, the Republican candidate, says he's not dropping out. The incumbent mayor, Eric Adams, says he's not dropping out. We've passed the ballot deadline. If we were to have a race where it's you against Zoran Mamdani, polls still show him leading you by a substantial amount. What do you see in the electorate that the data aren't showing when it comes to that particular configuration?
Yeah, well, polls are historically wrong, especially this year, especially in New York. On your first point, you can stay in the race. First of all, technically, nobody can get off the ballot, right? The question is, are you viable in the race? And you can have people who are in the race, but the voters just think they're not really competitive. They can't win. I'm not going to waste my vote. And I think that's what happens here. I think it comes down to me and Mamdani. I think when people understand what Mamdani stands for, besides what he has said on TikTok, he's anti-police, disband the police, legalize prostitution, legalize the drug trade, abolish jails. This would be anarchy in New York. Socialism does not work in New York City. It's antithetical. We're the business capital, right? We're pro-business. Business is the engine that drives the train. So none of that has been communicated yet. And when it does, I can tell you the minds will change.
Is there an effort by you and your campaign to try to convince Eric Adams or Curtis Lee to drop out of this race? Are there conversations that are happening behind the scenes to make what I imagine you see as a compelling case for them to step aside to make this more of a one-on-one race?
No, I'm sure they're making their own decisions. Look, I've been in elections where I have dropped out because I thought it was the right thing to do. They have a decision to make. There is no apparent path to victory for them. They, in essence, would act as a spoiler, and that's a decision they have to make. They have to make it personally, and that's their business. But again, I think it's going to come down to a two-person race no matter what, because that's what the polls are going to say, and that is the choice. I am a Democrat. My father was a Democrat. I worked for Bill Clinton. Zoran is a socialist. They call themselves democratic socialists, right? Didn't support Democrats. Said Barack Obama was a liar and evil, and didn't support Kamala Harris against Trump, right? So this is a very different This is apples and oranges between the two of us.
I want to ask you about some comments that Curtis Sliwa made yesterday. I'm sure you heard them. He was campaigning and suggested that you or affiliates of your campaign had reached out to him and offered him money to the tune of $10 million to drop out of this race. And I'm going to quote from what he said during that campaign event. He called these classic Andrew Cuomo tactics. Why don't you strap up Cuomo to a lie detection machine and ask him, and we'll all be blown to kingdom come because he's behind it. I don't have a polygraph machine with me here, but how do you respond to what he's alleging in those comments?
Look, you have to take Sliwa with a grain of salt, right? He is a known con man. He's lied about being victims of crime before. But it's very simple, David. When he said that, someone should have said, who? Who offered you the money? Let him answer the question, because it would happen to be a crime, right? Who offered you money? He never said who, which sort of tells you, right, that it's all malarkey. There was no person who did it.
I want to ask you, last, we've talked about the state of the race, where you hope that it's headed, and if we can, I'd like to look back to 1977, so a ways. You were 19, you were a student at Fordham University, your dad was making a run for mayor, and you were helping out on the campaign. He didn't win the Democratic primary and decided to run on an independent line for mayor. He ended up losing that race by 9 points. They say that history doesn't repeat itself, but it rhymes, and I know that you don't want history to repeat itself here. You'd like to win this race in a way that he wasn't able to back then 50 years ago. I'm not the first to point out this historical parallel, but I imagine you've thought about it. And I wonder how that experience has informed your outlook on this race. There was introspection after the primaries. You didn't do as well as you wanted to do. You decided to make this run. What can you learn about that race that your dad waged, and how does that inform the way that you're running this one?
My father was an extraordinary individual on many levels. Highly principled, frankly atypical for a politician. And he did, quote unquote, the right thing, whatever he thought the right thing was. For me, I believe in the Democratic Party. I believe in what my father stood for, what John F. Kennedy stood for, and Robert F. Kennedy stood for, and Bill Clinton, and what Mamdani represents, and this Democratic Socialists of America, DSA, socialists, call them whatever you want, is repugnant to the Democratic Party, I know. And that's what's really going on here. This is a civil war within the Democratic Party, right? Where the extreme left is pulling the Democratic Party. And the moderates are afraid of the extreme left. It's the inverse of the Republican Party when they had the Tea Party, and the Tea Party was pulling the Republican moderates too far to the right because they were afraid of them in a primary. That's what's happening here. It's a battle for the soul of the Democratic Party. And the Democratic Party is not anti-business. It's not anti-police. That's not who we are. We're not about redistributing income as a policy, right? You tax to provide a service. You don't tax to take money from the rich to give it to the poor, right? That's why Donald Trump calls him a communist. So this is not the Democratic Party that I believe I represent, and traditionally has served this nation well. He has zero experience in the position, never managed anything, 5 employees, never had a real job. And when you're willing to consider chief executive of New York City, no management experience, ran 5 people, now he's going to run 300,000 employees, $115 billion budget. You wake up any morning, you could have a terrorist attack, you could have another COVID. It just demeans government and demeans public service in a way that I just find abhorrent, and I'm going to do everything I can to stop it.
Governor Cuomo, thank you very much. Appreciate it.
Thank you.
I'll send it back to you.
Our thanks to Bloomberg's David Gura there. And a reminder that Michael Bloomberg, the founder and majority owner of Bloomberg News parent Bloomberg LP, has endorsed Cuomo in the primary and contributed to his PAC. Ed.
Okay, we have some breaking news crossing the Bloomberg. Amazon has agreed to pay $2.5 billion in penalties and refunds and to change its process for how you cancel Prime subscriptions. This is in the FTC case against it. So the split is that the company will pay $1 billion in civil penalties and refund $1.5 billion to customers. The accusation that the FTC had made was that Amazon was misleading millions of customers into signing up for Prime, but then making it intentionally difficult to cancel. They will now change that process overall. When the news broke, there was a brief spike into positive territory, but we're still down 0.2%. The extraordinary thing, Caro, is remember that the trial in this case with jury selection was only 3 days ago, and they've reached a settlement, $2.5 billion in just 3 days. Let's get to another story out of the UK. AI data center developer Nscale has just raised $1.1 billion just 1 week after announcing its partnership with Nvidia and OpenAI in the UK. Let's get more from Bloomberg's Mark Bergen. A lot of focus at the moment on the Neo cloud, and Nscale kind of fits into that. What are the details from this story?
We know a lot more than what you said. This is 1.1 billion. They've described it as one of the largest. Actually, they said it's the largest Series B round in Europe. You know, it's really fascinating to see the scale, though. We have some in our story in the Bloomberg today about this might be just the amount of money they need to purchase just one of their data centers they have had planned to build in the UK. And I think, you know, they are claiming to go out and deploy 300,000 Nvidia GPUs. So they're going to need a lot more money. We're not sure if this is just equity or equity in debt, but they're likely to be raising probably both of more and very soon.
And your investigations before shown that Nscale, very briefly, Mark, has never built a data center before.
Yeah, I mean, what do you need experience? To be fair, they spun out of a crypto mining operation, kind of similar to what CoreWeave did. They have hired senior executives that have a lot of experience, but the company itself hasn't.
Bloomberg's Mark Bergen, short and sweet, and we so appreciate it. Thank you very much. Coming up, the wave of AI data center announcements keeps on going. We'll talk to Barclays next. Welcome back to Bloomberg Tech. A quick check on some key names that move this market today. Look, we are just questioning some of the valuations within the S&P 500, within the Nasdaq. We're on pause ahead of those big inflation numbers tomorrow. But I dig into individual names that continue to push higher. CoreWeave turned around. It was trading lower, and then it goes into the green by 1.5%. Why? They've got yet further commitments coming from OpenAI to continue to build out their data center needs. They're upping it by another $6.5 billion to more than $22 billion in commitments. That's important because we'd worried about perhaps the focus on Microsoft as a key client for CoreWeave. Now the Neo Cloud really pushing in to other areas of growth. We're also looking at Nvidia up 0.7%. This as we just digest this phenomenal scale of investment coming from this company, whether it's backing Intel last week to $5 billion, whether it's $100 billion in terms of equity going into OpenAI. No matter what, when they commit to increase their AI spend, the market rewards them, Ed. And interesting notes coming out on this company today as well.
Yeah, I think Nvidia's worth lingering on. Barclays out with a new note, raising its price target from $200 to $240, maintaining an overweight status on the stock. Barclays research analyst Tom O'Malley joins us, the author of that note. You are in the camp of people that listened to Jensen Huang when he said this is going to be a $1 trillion opportunity or industry. And then very recently said, actually, it's going to be a $3 or $4 trillion opportunity. And now you, like many, say it's a bit more believable to us. Just explain your thesis.
Perfect. And thanks for having me on the show. I think in a prior segment, you had Joanne on talking about how the pie keeps on growing. If you look at compute announcements since December of 2024 through date, we're looking at over $2 trillion of announced dollars of compute and over 40 gigawatts of power. If you look at what Jensen said historically, about 65 to 70% of that is related to compute. So if you look at what it could mean for Nvidia, it's about $1.5 trillion really coming into the pipeline over a very recent period of time.
Tom, you saw the announcement between OpenAI and Nvidia, right, from the end of from earlier this week?
Yes.
Okay, so on the internet, the analogy or metaphor that people are using with that is it's like an extension cable. That Nvidia is the extension cable. They're unplugging from the wall and just plugging back into the cable. Do you see what I'm asking about? Nvidia puts $100 billion into OpenAI in order for OpenAI to take $100 billion worth of Nvidia gear.
Absolutely.
How do we interpret that?
I mean, there's two big concerns with the deployments of AI right now. It's one, power, and then two, the circular reference issue that you see brought up again and again. I would say you can flip this argument on its head. Obviously, it's early days here, and there is reason to be careful about circular issues in terms of investment. But I would ask, where should Nvidia invest their money? I think buying back stock now would be one option, but Jensen's in founder mode here. He's looking to create an ecosystem where you're having more and more players actually drive AI further on. And I guess the other point would be, this is not just Jensen. You're seeing investments from AMD and Broadcom, and this is going to be something that's driven forward by a group of companies. But clearly a concern that many investors bring to light. But I do think that NVIDIA is in a unique position where they're taking the capital that they've made and they're reinvesting it in their space. So can look at that argument both ways.
Look, they've just deployed in Europe with Nscale. They've been deployed in Neo Clouds and CoreWeave, for example, Tom. What's so interesting is where the house of cards could fall. What would limit this up and to the right perspective about AI compute needs and that feeding in to NVIDIA and indeed all of the semiconductors that currently have a stake in providing AI accelerators?
As you mentioned earlier in the show, it's the return on investment first and foremost. And I think that what we do in the note that we had out today is try to show what the investment from a chip perspective is looking like versus what the ROI is. And we do that by looking at hyperscaler RPO. So you look at AWS, Azure, GPC, Oracle, and over the past several years, that's been growing at a 30% CAGR, so essentially hyperscaler backlog. That's exploded to over 80%, and if you look right now, the backlog's at over $1.1 trillion. So what you're seeing first and foremost is that you're getting some ROI, you're getting some business that's stepping up. That's an area of the world that we can do a little more work on. The other side, which is less in the semiconductor ecosystem, is the power side, where if you look at what 40 gigawatts means, you're talking multi-major cities in terms of the deployment. So that's really where the investment needs to focus on from this point forward, because if you don't have a utility bill for someone living in a city and that's being sucked to another data center, that's a serious problem.
Tom, it's interesting that I think Alibaba chimed in, the CEO, saying 4 trillion is his number too by 2030. But I cast my mind back to March when there was a wobble in the market, when we did start to question some of the valuations. That was because the chairman of Alibaba had said there was a bubble in terms of AI infrastructure investment, particularly in the US. So how much of this, what alarm bell rings for you when we start to get into a valuation that screams bubble? Because you see Nvidia could go up another 30% or so.
Yeah, I think there's two things to look at. The first sort of reset in valuations this year came around DeepSeek, and that was a change in where we saw the AI revenue coming from. We've transitioned to what was scaling laws in training, so all these guys making money on training, and now we're moving more to the era of inference, which is people actually using these models, seeing agents out there actually serving individuals. And so you've seen a shift in where compute spend has actually gone. So the ROI is helpful, and it makes me feel a bit better as we go along here, and we'll continue to look at OpenAI, Anthropic, and you'll see more fundamentals come out as time goes along. But the concern is always, these are very large numbers. Where do these dollars come from? First step is look at hyperscalers. If you look at today, the CapEx as a percent of op income is still around 50%. I wouldn't start to get worried until you're above 100% and getting to a position where you're obviously taking on debt to do this. And then secondly, I would look at the sovereigns, where globally you're starting to see countries invest in this, and that's additional dollars that is outside of that original pie. And that was always the proxy for when do we run out here? When do we get to the limit of hyperscaler CapEx?
Tom, you did not reference Intel in the note you published overnight, but you do cover Intel. I just wanted to ask for your reaction to the Nvidia equity investment in Intel, but actually for me, more the partnership on x86 and also in the PC domain. Like, how do you interpret that, please?
Yeah, I think just first and foremost, from a very 30,000-foot view, it's good that Intel is getting dollars to bridge the gap here. There's obviously been some capital concerns. When it comes to how it moves the technology profile forward, we've seen a government investment. We've seen some other investors, Brookfield and Apollo, over the past several years, and you haven't seen a big change in the technology profile. What I would argue is that this is very favorable for NVIDIA. You potentially have Intel focusing an AI product for x86 CPUs in the data center that will help with the 36 and 72 systems that Nvidia has out there today. On the PC side, gaming PCs already have a discrete GPU. Nvidia's already there. Maybe you could see some collaboration that helps drive forward Intel's push on the AI PC side, but largely this seems like a more favorable agreement for Nvidia. And funny how times change with Nvidia stepping in to rescue Intel here.
Okay, Tom, let's end here. So there's consensus that in AI and data center, at least, this will be a $4 trillion industry over varying timeframes or addressable opportunity. Have you and your colleagues and peers calculated how much of that you expect Nvidia to take? And have you factored in competition from AMD, Groq, and other custom ASIC solutions that are coming out?
Yeah, so I don't think we've done a full analysis when we get to that 4 trillion. Boy, that would be great if we do. But I would say that right now, general purpose silicon still represents greater than 90% of the market. And that's Nvidia and AMD. Broadcom, with their announcement, particularly with OpenAI, is starting to take more share. If you look at the longer term horizon, I still think general purpose silicon makes up a majority of the market, say 60-40. But you do see from where we are today, general purpose silicon is a much larger piece of the pie. So again, as Joanne was saying before, it's smart to be invested across these names. If you look at Broadcom, they're just growing at a much faster rate than where they are today, which makes that story very interesting as well. So I guess in summary, just $4 to Nvidia over the long term as I look at the market,
right,
but a faster growth rate from the custom silicon guys.
Tom O'Malley from Barclays, I think the first time on Bloomberg Tech, and we've really enjoyed it. Thank you very much. Carrie, what you got?
It is time now for Talking Tech. And first up, Elon Musk's XAI and the US government has signed a deal that allows federal agencies to use Groq AI chatbot. Now, the deal is part of a push to speed up adoption of new technologies like artificial intelligence. And at just 42 cents per agency, it's the cheapest contract yet under the government's new initiative. Plus, the Trump administration has launched investigations into imports of robotics, industrial machinery, and medical devices. The probes set the stage for tariffs, which the president is allowed to place on goods deemed critical to national security. And Apple is calling on the EU to scrap the Digital Markets Act. Now, the US tech giant argues that the consumer protection law worsens user experience, increases privacy risks, and threatens to undermine innovation, though the company says it is complying with the law while it's in place. Ed.
Okay, coming up, Alexa von Tobel of Inspired Capital joins us. She'll explain why she says physical AI is reaching an inflection point and the impact of quantum on financial services, which today is a top story. This is Bloomberg Tech.
HSBC says it's achieved a breakthrough in deploying quantum computing in financial markets. Now, using IBM's Heron quantum processor, the bank was able to improve bond price predictions. Let's talk about the opportunity to invest in this next frontier of computing with Alexa von Tobel, founder and managing partner of Inspired Capital, previously the founder of fintech startup LearnVest, which is sold to Northwestern Mutual back in 2015. And what interests me so much is within your podcast, you've just been speaking to a founder you've backed, Logical, all about the future of quantum. You've been deep diving on this. So when you see these sorts of iterations and breakthroughs, what do you make of it? Where is the opportunity for you in the seed and the Series A?
First of all, great question. As you know, I'm a long-term early stage investor, and I like to look for companies that could be worth 10, 20, $30 billion. There's very few of those in the world, and I think that led me to quantum now almost a year and a half ago, thinking it's sort of the next wave of innovation after AI. And the potential is profound. Once and if we build these quantum computers, and mind you, it's a category where people have been toiling away for 30 years without much success. But the best experts in the world believe that in the next decade, we will begin to see real advancements towards building the first scaled quantum computer. And what comes out of that is huge advancements in financial services and pharmaceuticals and all these other categories that are going to change the world in a profound way.
When you think about IBM's role here, and they've come on the show and said by 2029, our quantum computer is going to be in there in the wild and achieving real things. Then from the early stage founder, How are you seeking them out, and where can they add to the quantum process?
Sure. So I think the big goal right now is people are trying to get to 10,000 qubits. So many different hardware types, 6 or 7, based on how you cut it. And I think your most important researchers and PhDs in the world are trying to get to 10,000, 100,000 skilled qubits. That is the march that everyone is working towards, and we're rooting for them.
Alexa, I'm really interested in the business model, which I know is a bit of a dry way of looking at it. But when we think about compute for data centers in the AI context, people lease that capacity, right?
Yep.
I think about the work that Google is doing in quantum. It uses its quantum machines in-house for research. So with what HSBC did with IBM, and when you're looking to invest in the earlier stages of this field, how do quantum computing companies give their services to a financial institution like an HSBC? What's the model for that?
That's a great question. So I think we're going to see a few things. First of all, right now, people will rent out their quantum computers. You're seeing prices from $10,000 to, in different cases, $50,000 per hour, et cetera. So people will rent them out. I actually think it could be a profound business model shift, which is whatever is created with that quantum computer, whatever IP, whatever technology that comes out of using those advancements in compute, that you could take a revenue stream forever. So that is sort of an interesting shift. Somebody once said to me that whoever builds the first quantum computer almost overnight could become Pfizer, because the compute of what's possible for pharmaceuticals could be that profound. So it gives you a sense of the shift, which is you could potentially take a stream of the IP that comes out of quantum computers as a new business model entirely.
Alexa, you are one of many, I would say, that is arguing that physical AI is having a ChatGPT moment. Physical AI is now a pretty broad category. So which vertical within that would you say that is most true of?
Great question. So what I get excited about, as everyone was running at digital AI, as you've seen the dollars pour into the category. At Inspired, our venture fund, early stage venture fund, is very thesis driven. So for us, what physical AI means is taking big foundational models that now exist credibly that can interact with things like sensors and robotics and create smart devices everywhere in our physical world. If you think about just our infrastructure, we all live because of our infrastructure, our water, our pipeline, our electricity, our roads, and we're getting to the point where we can no longer be reactive, which is what we are. It's almost like the Roman times. Something breaks, you go and fix it. To becoming predictive about our ecosystem around us, our world and infrastructure around us. And that is what we mean by physical AI at Inspired. We're really looking for the intersection of observability and predictability in the environment around us.
And looking at your portfolio companies, you've already made some key bets
yes,
here.
We have.
Thinking about Bright AI, TC Labs. What is it that these companies that we see on our screen now have offered you from the seed and Series A area that you feel hasn't been adopted already by big industry, by big companies already listed?
Sure. I'll start with Bright AI. Bright AI, Alex, the CEO, is an absolute technical genius, the godfather of IoT, and he invented a sticker. There's now 250,000 already deployed of these stickers, and they can go on anything from a utility pole to a water pipeline. And here's what it does. It then sends an observability layer back to whichever company has bought these stickers and can say now proactively, the utility pole is 25 degrees slanted. Let's go fix it before it falls on an electrical wire and takes power grids out. Literally, men and women walk up and down utility poles right now and observe them physically and then fix things versus being predictive in fixing it. Bright AI in the water world will literally find inside pipelines the leaks. And right now, today, we lose 6 billion gallons of treated water, which is 15 million homes of water. Think about that every single day because of leaks and bursts. And Bright AI is the sensors that will get ahead of that. So that's Bright AI, a company we're really rooting for. Another company, as we said, was TC Labs, which is an incredible team out of Google. They're trying to save 1 gigaton of carbon each year. And what they do is go take the energy we already have. So think about this. Because of AI, we need wild amounts of energy, right? There's not enough energy is the headline. And so they are going to the infrastructure we already have, oil refineries, and not only helping make them be more efficient using AI so that they can produce more energy, but also more carbon friendly. So that's TC Labs. And then finally, TreeSwift is the data set of sensors for our forests. The forests are the lungs of the planet, and they are measuring them so that we can get ahead of forest fires and major storms that then take power out. So as you see, we are very forward-thinking in physical AI.
Alexa Von Tobel, co-founder, managing partner of Inspired Capital. Thank you very much. South Korea says investment projects in the US will remain in limbo until visa issues are resolved in the wake of the Trump administration's immigration raid at a Hyundai LG Energy battery plant in Georgia. South Korean Prime Minister Kim Min-suk sat down with Bloomberg's Heron in Seoul for an exclusive interview.
Realistically, without a solution, it's difficult to invest in the United States and carry out the various joint projects currently planned between South Korea and the U.S. We absolutely must find a solution. Several projects are underway between South Korea and the U.S. Without resolving the visa issue, meaningful progress remains virtually impossible.
Coming up, Disney readies for a legal battle with President Trump over Jimmy Kimmel's late-night return. More on that next. This is Bloomberg Tech. Disney is gearing up for a legal battle with President Trump as it anticipates retaliation from the president for putting Jimmy Kimmel back on TV Tuesday night, which drew, in fact, a record 6.26 million viewers for the show. For more, Bloomberg Entertainment reporter Felix Gillette joins us. So what areas of the legal system do they think that they'll be attacked on, and do they feel that they're defensible?
Yeah, I mean, I think there's two fronts. There's the legal side and there's the regulatory side. So Trump and FCC Commissioner Brendan Carr have said, we're going to potentially pull your licenses for your ABC stations and the affiliate stations if this continues with Kimmel on the air. That seems like a threat that's going to be very hard to pull out. There's really no precedent of the FCC being able to revoke licenses over programming decisions. So I think Disney has to feel pretty good on that front. But then there's also the regulatory side. And, this is a rapidly changing media environment. Disney is doing a lot of deals. Those deals do require approval. They can come up and have resistance from the Department of Justice, the FTC on antitrust grounds.
Right.
And so I think Disney definitely has reason to be concerned there.
Felix, Jimmy Kimmel Live averaged 1.55 million viewers this year, according to Nielsen data. So they put the statement out saying that for that comeback episode, 6.26 million viewers. But even more of the monologue on social media. Just summarize the reaction.
Yeah, it's been a huge reaction. I mean, this has been an incredible thing for Jimmy Kimmel. Before he's, part of the genre of broadcast television that's fading out, and suddenly he's the face of free speech against the administration. So if the idea from Carr and Trump was to get Kimmel off the air, this has really backfired. They've done the opposite. They've gotten his biggest audience in years. And, I think there's going to be continued interest. And for now, Disney is saying, look, he's our guy. This is a free speech issue. The First Amendment protects his right to criticize the president, make jokes about the president.
Yes.
And this has really backfired for Carr.
Bloomberg's Felix Gillette, thank you very much. More breaking news. Meta is set to face a charge sheet from the EU for failing to adequately police illegal content, risking fines for violating the bloc's content moderation rulebook. The European Commission is preparing to issue prelim findings saying that Meta's Facebook and Instagram lack, quote, notice and action mechanisms that would let users flag illegal post removal. That's Bloomberg reporting with sources, Kara.
Keep an eye on that stock. But meanwhile, that does it for this edition of Bloomberg Tech. Ed, you don't want to forget the podcast, do we?
Yeah, check it out. You know where to find it on the Bloomberg platforms, online, Apple, Spotify, iHeart. From San Francisco, New York City, this is Bloomberg Tech.